Ladies and gentlemen, damas y caballeros, most people think that having and building wealth is something that's only achievable when you have a high income. However, regardless of whatever your income is, if you can learn basic knowledge of financial organization, investing in the stock market, then you can build wealth in your own life. And so this video is going to act as a guide to people who have no knowledge on these subjects to help you build wealth in your life. And in this video, we're going to cover a variety of different topics that can help you get started on your journey to build wealth. We're going to cover what wealth is, building an emergency fund, developing a basic investment strategy, employer-sponsored retirement accounts, individual retirement accounts, and brokerage accounts. And I hope by the end of this video, you can start taking steps in your own life to build wealth and become more financially comfortable. And everything is timestamped below, and also in all my videos, I always provide a lengthy summary in the description of what we talk about, so feel free to check that out. So on your journey to building wealth in your life, let's first talk about what is wealth. When it comes to building wealth in your own life, I find it extremely important to first talk about what exactly wealth is, because I think that most people have a distorted view of wealth or what it means to be wealthy. I think that influencers, celebrities, and billionaire entrepreneur heroes have given us this view that a wealthy person lives in a mansion, has a variety of sports cars, wears designer clothing, has Rolex watches, and a no-limit credit card. But this is not what wealth is. Real wealth is having financial knowledge, assets that make you money, limiting your liabilities, avoiding debt, and having a long-term mindset. Real wealth is not about having a bunch of nice stuff, but it's about having a financial life that doesn't hold you back. It's about using money as a tool to allow you to live the life that you want, whatever that may be. So don't chase this superficial influencer view of wealth, and instead focus on developing real wealth that allows you to live the life that you want. So now that we've talked about that, on your journey to building wealth, I think the first thing that we need to talk about is building an emergency fund. Besides employee-sponsored retirement accounts, which we're going to talk about later on in this video, I personally believe, and this is just my opinion, that before you start building wealth in the stock market, you first need to focus on building your emergency fund. And an emergency fund is a financial safety net for unexpected life expenses. And these are things like an unexpected car expense, a medical expense, or when you lose your job. We never know what's going to happen in life, and so we need this money to protect us against life's emergencies. If something unexpected happens in life, you can use this money to cover it. And ideally, this should be 6 to 12 months of living expenses. And on your journey to building wealth, the reason I believe that you should focus on the emergency fund before investing in the stock market is because you never want to be pressured to take investments out at a loss. The stock market can be very unpredictable, so we want to build the solid emergency fund first because we never want to be pressured to take out stocks to cover our emergency. When you're building your wealth, the first step is simply just open up a savings account to separate your emergency fund money from your spending money, and over time build that up to 6 to 12 months of living expenses. And to get a decent interest on your emergency fund, I'd recommend looking at the bank Ally that currently has a 4% APR, which is insanely high. So this emergency fund is the first step to building wealth in your life. And once you have a solid emergency fund, or you complete your emergency fund, to begin really growing your money and building wealth, we now need to start investing our money to get it to grow over time and get it to work for us. And to do that, let's first talk about developing a basic investment strategy. Now, before we can start investing our money, we first just need to develop a basic investment strategy to grow our money and build our wealth over time. And to do that, let's listen to one of the greatest investors in the world, Warren Buffett, and how he believes that we should invest our money.
The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you.
Warren Buffett believes that the average investor shouldn't invest in stocks, but just choose to buy low-cost index funds and forget about it. And I think we should side with Warren Buffett because it's so simple, and we should just invest our money in low-cost index funds and forget about it. And I'm not going to go in detail about index funds because that's a whole video, and I made the video up here. But our basic investment strategy starts with choosing to invest in index funds. And to continue on developing this strategy, our next question is, how often should we purchase index funds? Well, I believe, and this is just my personal opinion, that we should follow a strategy called dollar cost averaging, which is spreading out your purchases over time. And what this basically means is that you say, I can invest $100 a month in a low-cost index fund. And if the market is normal, you buy $100 that month. If the market crashes and is low, you buy $100 that month. If the market is an all-time high, you buy $100 a month. And the price you pay averages out over time. And we do this because we don't know when the market is going to go up or down. So instead of trying to time the market, we just spread out our purchases over time. And again, this is called dollar cost averaging. And so that's our basic strategy to build wealth over time. 1, invest in low-cost index funds. And 2, dollar cost average. It's the Warren Buffett approach. It's so simple. And there's a quote by Warren Buffett that goes, "It's not necessary to do extraordinary things to get extraordinary results." And so now that we've created this basic investment strategy, I now want to go through 3 different accounts that you should consider getting that can help you build your wealth and grow your money over time. And each account will provide different value in different ways. So the first account that I want to talk about is employee-sponsored retirement accounts. The first account that can help you build your wealth over time are these employee-sponsored retirement accounts. And the most common one is a 401k, which is a pre-tax investment. Now let me explain how a 401k works. Let's say you make $1,000. Now before you get that money, you have to pay taxes on it, maybe 20%, and then you get your take-home pay. But now let's consider your employer offers you a 401k plan and you decide that you want to contribute 5% of your pay to that 401k plan. How this works is before your money gets taxed, your employer takes out 5% of your pay, which is $50, puts it in a 401k account, which we invest in a low-cost index fund, and then your money gets taxed and you get paid. And so your money goes a little bit further in these accounts because when you put your money in, the money hasn't been taxed yet. For example, if you chose to contribute 5% of your take-home pay, that would only be $40. And so the first benefit of this account is you can contribute tax-free. And a common thing with these accounts, and one of the big benefits of these accounts, is something called an employer match. Now let me explain how this works. Let's say your employer has a match of up to 5%. So like before, you choose to contribute 5% of your pay to the 401k, which is $50. But because you have a 5% match, your employer also contributes 5% to your 401k. So your contribution is $100. And so with this account, you're able to grow your money a little quicker. And although the contribution is tax-free, it's important to know that when you retire and decide to withdraw the money, you will have to pay taxes on it. But using these accounts is a great way to build your wealth over time because 1, you can contribute tax-free, and 2, employers often have matches. So look to see if your employer offers a 401k plan and try to maximize the match because it's like getting a little bonus from your employer. It's almost like getting free money that's going to help you build your wealth a lot quicker. And so now the second account that we need to talk about to help you build your wealth over time are individual retirement accounts. So the second account that's going to help you build your wealth over time are these individual retirement accounts. And the names of them are a Roth IRA and a traditional IRA. But in this video, we're just going to focus on the Roth IRA. Now, as I just explained, a 401k is a pre-tax investment. So your contributions are tax-free, but your withdrawals are taxed. A Roth IRA, on the other hand, is an after-tax investment where your initial contribution is taxed, but your withdrawals are tax-free. Now, this might sound confusing, so let me explain how this works. Let's say, just like before, you make $1,000, and that money gets taxed about 20%, which makes your take-home pay $800. And you decide to contribute 5% of your take-home pay to your Roth IRA, which is $40. So you're still choosing to invest 5%, but it's a little less because that 5% has been taxed. Now let's go to the compound interest calculator and see what happens to your investment over time. So you're investing $40 a month in your Roth IRA, and you do that for the next 30 years. The stock market has an annual return of 10%. So let's click Calculate. So 30 years later, when you decide to retire, that $40 monthly investment has grown to $78,957. And so let's break that down. Now you only put $14,400 of your own money, but the interest you gained off the contribution is $64,557. That is the beauty of the stock market and compound interest. But to make it sweeter, because you chose to invest in a Roth IRA, when you decide to retire and withdraw that money, you do not have to pay 1 penny in taxes of that $64,557 of interest, because you already paid taxes on the money before you contributed. Roth IRAs are the crown jewel of investment accounts because you gain all this interest over time that helps you build your wealth, but once you choose to withdraw it, you don't have to pay any taxes on it. Versus a 401k, you can contribute tax-free, but when you withdraw it, you have to pay tax on the interest. And so you should get one of these accounts, no question. And how do you get one of these accounts? Well, you simply go through a brokerage like Schwab or Vanguard or Fidelity. And they can help you and walk you through how to get one of these accounts and not only contribute to these accounts, but more importantly, to invest with these accounts, because the interest you gain off your investment is going to be a lot bigger than the contribution that you put in if you choose to invest it over a long period of time. I mean, the tax advantages of these accounts is incredible. However, they do have a yearly limit of $6,500. These accounts are a great way to build your wealth over time. And as I said in my example, even a small contribution of $40 a month can grow to this massive amount over time. And the final account that I want to talk about that can help you grow and build your wealth are brokerage accounts. So let's quickly review the different ways that we can build wealth in our lives. We can build an emergency fund. We can develop a basic investment strategy. We can take advantage of employer-matched 401ks, and we can open a Roth IRA. So the final strategy to build wealth sort of encompasses everything that we've talked about in this video, which is open up a brokerage account and invest in the stock market. A brokerage account is just a basic investing account that allows you to invest in stocks, bonds, mutual funds, ETFs, CDs, and many other things. And those different investments are a whole different video, and I'm thinking about making a video on how to invest in the stock market. So if you're interested in that video, let me know and I can make that video. But when you open up a brokerage account, you can begin investing in the stock market and just dip your toes and learn about investing. The stock market is an amazing tool that can help you grow your wealth over time, and we should all take advantage of this tool. And so those are the 5 different ways to build wealth over time. And as I said in the beginning of this video, real wealth is having financial knowledge, assets that make you money, limiting your liabilities, avoiding debt, and having a long-term mindset. It's not about having nice things, but it's about creating a financial life that doesn't hold you back. And I hope that after this video, once you continue on your day, regardless of whatever your income situation is, you can begin implementing some of these different strategies to build wealth in your life and use money as a tool to do what you want. Because as I mentioned, even something as small as a $40 a month contribution can add up to something massive passive over time. It's not necessary to do extraordinary things to get extraordinary results. All it takes is some education, some financial planning, and some action. And if you can do those three things, you can begin building wealth in your life regardless of whatever income situation you're in. And with that, muchas gracias. Que tenga un buen día. Video 128. Nos vemos, chicos.